Hi there, this is Ten. Today, we're talking about an EV company that I'm extremely excited to build my position in. Given that the EV space is getting more and more competitive, it is very hard to know which company will survive. Currently, Tesla is destroying the competition, but just how long will it take for this ICE company to compete aggressively with Tesla? Moreover, new spec companies are entering the market to compete against. In today's video, we'll be talking about an EV company that benefits regardless of which company has a market share over the EV market. The company that I'm talking about is Plug Power. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the difference between Plug Power and other EV companies. Unlike most EV companies, Plug Power does not produce any vehicles. Instead, it produces hydrogen fuel cell systems that are compatible with most EVs. This means that Plug Power will do well regardless of who has the market share in the EV space. Not only that, it helps to complement existing EV charging stations. Rather than competing against these EV companies through products, it competes through service. Next, we will be talking about how the CEO feels about the industry after Democrats wins the Senate. Plug Power CEO Andrew Mesh on Thursday applauded the Democratic sweep of the Georgia Senate runoff earlier this week, expressing an optimistic outlook for the future of green energy. As a result, Andrew sees more policies coming out of Washington that will benefit the renewable energy sector. Plug Power announced on Wednesday that South Korea-based conglomerate SK Group is dishing out $1.5 billion to get a 9.9% stake in a fuel cell producer as part of a partnership to reach Asian market. President Joe Biden is seen as a positive for the renewable energy industry. As part of his climate change plan, the current president laid out a goal of using renewable energy to produce carbon-free hydrogen at the same cost of producing shale gas. With Democrats in control of the House and Senate, where Vice President Kamala Harris will serve as a tie-breaking vote, President Biden and Democrats will have an easier path to push through their policy priorities. The cost of hydrogen fuel and other renewable energies have presented a challenge over the years to get the ball rolling on the industry. Green energy is expected to be a disruptive force in transportation. Secondly, we'll be talking about the recent drop in its share price due to its latest earnings. Shares of Plug Power dropped on last Thursday after the company reported fourth quarter results that missed analyst estimates. The New York company reported a net loss of $476.3 million or $1.12 a share, widening from $18.3 million or 7 cents a share in the year earlier quarter. Revenue of negative $316 million compared with analyst consensus forecast of $87.2 million. The company has said that revenue and results were hurt by $456 million of costs in the quarter. The majority of those costs were charged related to the accelerating vesting of a customer remaining warrant. The customer wasn't identified. Secondly, the company along with South Korea SK Group said that they have completed a $1.6 billion capital investment to partner in accelerating hydrogen fuel cells as an alternative energy source in Asian market. Next, we will be looking at how the analysts feel about purchasing shares after the recent miss in the company's earnings. The analyst is from the streets. Unfortunately for Plug Power bulls, the stock has lost its momentum and the fourth quarter report doesn't seem like it will help get it back. On the plus side though, shares in making new lows, at least not yet. Once shares lose uptrend support and failed to regain it, the momentum was gone. Plug Power stock also lost its 10 and 21 days moving average around that time too. The stock did give traders a strong bounce off to the 21st week and 100 days moving average. It also filled that big gaps from early January. However, it is now facing the 10 and 50-day moving average as slightly resistant, as well as a $50 mark. Now, in between recent support and resistance, investors simply have to wait to see which is revisited first and whether these zones remain intact. For now, bulls might consider buying on a dip down to recent support near the 21-day, week, and 100 days moving average. If shares can get back over the 50-day moving average, then we may be able to make a case for a pullback to the 61.8% retracement near $61. That is, if Plug Power can push through some of its other moving average and $55. The bottom line, Plug Power likely face a more difficult road ahead of the company for the intermediate future. Unless EV stocks regain bullish momentum, this one may struggle. Finally, we'll be looking at the recent upgrade by JP Morgan. Plug Power's jump last Monday after JP Morgan upgraded the hydrogen fuel cells company to overweight form neutral. Analyst Paul Costa said in an investor's note that he was taking advantage of recent volatility to upgrade the company, writing that the stock is attractively priced at present, ahead of potential positive catalysts. Last week, the capital announced it had partnered with South Korea SK Group on a $1.6 billion capital investment to accelerate hydrogen fuel cells as an alternative energy source in Asian market. In conclusion, I strongly feel that Plug Power is a great buying opportunity. I am extremely excited about the company's prospect. However, I need to do more research before I can purchase shares in the company. If I decided to purchase shares in the company, I will do an in-depth evaluation of the company and explains why I decided to purchase shares in the company. With that, thank you and have a nice day. Goodbye.